Well, welcome to Indianomics. In a year's time, the number of banks in the country will go up by nearly 50%. Will this mean cutthroat competition, hence higher rates for savers and thinner margins for banks? Will some weak players in the private or the public sector bow out or get taken over? To answer these questions, I have with me Shyam Srinivasan, Managing Director and CEO of Federal Bank, Sharad Sharma, Managing Director and CEO of State Bank of Mysore, and Mr. AK Purwar, former Chairman of State Bank of India and now with the private equity fund India Ventures. But before I get to my guests, here's the terrain. Last week, DCB or Development Credit Bank announced it will increase its branches by 50% over the next 2 years to prepare for competition from the new small banks. The stock market punished the stock, but it didn't punish all mid-cap banks. Is the market being myopic about the coming competition in the banking space? Today we have 25 public sector banks and 20 private sector banks. Recently, 2 more new private banks have entered the fray, and in a year, 11 payment banks and 8 small banks will also enter, taking the total from 45 to 66. That's a 45% increase in the number of banks in just 18 months. Considering that the RBI has licensed only 9 new banks in the past 25 years, these 21 licenses in the past 25 months of the new governor spell a serious change in market dynamics. Also, some payment banks come with wealthy parentage. The AB Birla Group plus the Idea Telephone Network, the Reliance Group plus the RelGeo Network, the Airtel Group, the Mahindra Group and Vodafone all come with serious capital and technology network. Paytm comes with big private equity backing and youth-friendly technology. So much so, it has become a must-have account for anyone hailing a taxi in Mumbai. On the other hand, small bank licensees come with a terrific last mile to their customers and an ability to grab SME businesses. Both sets also have their constraints. Payment banks can take deposits and make remittances, but they can't give loans. Small banks have to ensure that 50% of their loans are of less than 25 lakh rupees unit value. So, will legacy banks be able to face this competition? Or will banks, at least mid-cap banks, face burnout from both ends? The payment banks taking away their deposits and small banks taking away their high-return borrowers. Those are the questions, and here are my guests once again. Shyam Srinivasan of Federal Bank, Sharad Sharma of State Bank of Mysore, and AK Purwar, former SBI Chairman, the ultimate boss of banking. Gentlemen, thank you very much for joining me. Shyam, to you first. First, would you worry more about payment banks or more about small banks?
I mentioned it a couple of times, not so much as worry, but we have to take it into our stride and believe that they will change some part of the market dynamics. And in some sense, the banks, the incumbents are very significantly focusing on upgrading and upskilling and making ourselves extremely competitive. I would say the challenge for the new players would be how do they stay fresher and different from the incumbents who have already absorbed this as a big way of doing banking. So I think the playing field from a customer point of view will get very exciting. Many choices will emerge. But at this stage, I won't say it's a worry as much as it's a great early warning and preparation is in full swing. And you could argue that the beneficiary of all this is going to be customers. In the process, unless we improve our operational capabilities quite materially, there will be impact on the overall profitability.
Mr. Sharma, should you not be worried more about the small bank competition? 3 small banks have got licenses in the Bangalore region. There is Jana Lakshmi or Janagraha, which is operating a fairly good business in Bangalore. Then you have got Equitas, and Equitas is already giving, I understand, about 2,000 crore loans to CVs, commercial vehicle segments. Not a small competitor. And then you have Ujjivan as well. So would you not worry that they will take away your high-margin SME borrowers?
I'm not doubting them on that, but their cost structure, presently, as you said, 8 of the 10 people who have been licensed are basically MFI players who are used to working on a margin. They borrow from banks at, say, 11%, 12% and do their lending at 25%, 27%. So the kind of margins which they are working at and they are successful at, there will be a little bit of a challenge in replicating that when they need to work on a margin of say 2% or 3%. And similarly, the cost structure. If you look at the cost structure of Bandhan before it was established into a bank, and the cost structure which they will have in the next 3 years when the Bandhan Bank is alive and fully kicking, so that is in itself a challenge. Ultimately, the liability side will put the pressure on the pricing of the...
I take your point that there will be a cost issue and perhaps even an inability to do due diligence. I mean, after all, they operate through SHGs. But your take, Mr. Purwar, as an outsider, do you fear that first there is a danger to the asset side for the mid-cap banks? I'll come to the large cap in a minute.
I would go a step further. You know, the licenses to these large number of banks, market is definitely growing at a certain pace. And if you take me, there is a possibility for all kinds of banks to have this kind of business. But in the short run and the immediate medium term run, there is going to be a huge competition in the market. With these licenses coming in, why mid-banks, why small banks? Even the larger banks will start feeling the heat, feeling the pinch. And as I was telling you in the discussions, it will become the question of survival of the fittest. The people who are able to get customers and attract them, give them services of a good quality at a decent price, I think that will make a big difference.
You know, that is the point. Actually, Shyam, in terms of brand recognition, surely an Airtel or an Idea or a Relgio is better recognition. Why won't I open that account rather than open a mid-cap account, even shift? Because I have the telephone already. It's not even much effort. If I already have an LVB account or a Karur Vaishya account or even a federal account, I might just switch, to a payment account, an Idea or an Airtel account.
I think there are 3 points. I think often use this to provoke the bankers to thinking, and I welcome that. But there are 3 points that we must keep in mind. And I keep repeating, it's not like the challenge is not real. But the first and foremost, while all these developments are happening, you are probably aware there is an entire evolution happening through NPCI on UPI. That may even, I would then question the existence of wallets and the Paytms of the world.
Okay.
Because I can then do with mobile instant to any bank. Why do I have to move money to a wallet and from a wallet to something else? So just as the development is happening on the emergence of a new banking category, the payment space itself is materially changing. And banks are at the forefront of it. So I don't think we can ignore that reality.
Okay.
The second, the same ideas and Vodafones and Airtels, often nowadays, unfortunately, when we call somebody on the mobile, we ask saying, do you have a landline to call? And it's a reality. If I call you in Mumbai on your mobile, then in the instance, can I talk to you on a landline? So there is a genuine problem. The same brands are not evoking the same response as they did a few years ago. So we can't believe that it's going to be an automatic choice. Third, we may grossly underestimate the power of a regional brand. The names that you mentioned, for somebody sitting in Mumbai, seeing world differently could mean very differently for somebody sitting in that local geography where their allegiance is significantly higher to that brand. So I think for these 3 reasons, there is a good case for these banks to upgrade the capability. So I won't believe that they will not come and walk away with the business. Yes, there will be, like Mr. Purwar pointed out, there will be stiff competition. The survival of the fittest, all that will come. But it's not like a winner takes all and there's only one winner. Is the only point I would add to what you're asking.
No, absolutely. Fair point. Actually, the payments, in fact, the Reserve Bank has just invited applications for people offering a payment network. So I take your point completely that the game may go away from the payment banks even before they're set up. But we have to take a break. I'm back in a jiffy with all my 3 guests and many more questions on how the banking terrain is going to evolve. Interesting times ahead.